Hello, hello, and welcome back to our channel. I am Elisa Scott. I am part of the Elite Insurance Group, and today's video will be about HSA versus FSA, as well as your deductible and co-insurance math questions that you will see on your life and health insurance exam. So let's get started. So we'll start with HSA and FSA. What you will most likely be tested on when it comes to HSA and FSA is, first off, what each means. So HSA stands for Health Savings Account, whereas FSA stands for Flexible Spending Account. With your HSA, it is a way for you to save money before to help pay for future medical costs. You must have a high deductible health insurance plan in order to qualify for an HSA. And the money that you put into your HSA can be rolled over from year to year. You can use your HSA money for things that are also non-medical expenses. Now, when you use your HSA funds for non-medical expenses, you will have to pay taxes on that, as well as a 20% penalty. There is one way of avoiding that 20% penalty, and that is to use those funds for non-medical expenses after you are age 65. That is what they consider Medicare age. So if you are over the age of 65 or Medicare age, then you would only pay taxes on the money that you spend for non-medical expenses. You will avoid that 20% penalty. Now with FSA, which is the flexible spending account, this is money that an employee can set aside from each paycheck. It's before being taxed, and they can use those funds for medical expenses only. Okay. There is a big difference between HSA and FSA, besides the fact that you can only use it for medical expenses. With FSA, you cannot roll the money over from year to year like you can with your HSA. Now, by the end of the year, if you still have funds that are available in your FSA, you have to use it or you will lose it. There are also what they call dependent care accounts that you can put money back for future medical expenses for dependents as well. But the government does put certain limits on it as far as how much can be contributed, how much can be used for those expenses and things of that nature. The other important things that you want to remember when it comes to the FSA is that as of 2023, employees are allowed to contribute up to $3,050 per year to that account. And at your employer's discretion, they may provide you with one of two options for your FSA funds. Now, I know I said that normally you cannot roll over and funds from your FSA from year to year. But one of those options, if your employer decides to do so, they can offer you have a 2.5-month grace period to roll over those funds and use those funds before you lose them. Or they can offer that you roll over up to $600 to be added to the next year's spending account, and you can use those funds. So once again, at your employer's discretion, you can roll over the money to give you a 2.5-month grace period, or you can add up to $600 to the next year's funds. Eligible expenses for FSA are things like your deductibles and copays. So you can use the spending account to pay deductibles and copays, as well as for your prescription meds, any dental work, as well as medical equipment, things such as wheelchairs, crutches, oxygen tanks, things like that. As I stated before, you do have some ineligible expenses, and those things are premiums. So you cannot use your flexible spending account to pay your monthly premiums on that plan. You also, as stated before, cannot use it for, non-medical expenses. Also, vet bills. So if you have fur babies out there, they cannot use flexible spending account to pay towards any vet bills. Another question that is sometimes noted on the test, they may ask you, what is the IRS publication that lists FSA as well as its eligible expenses? And that is IRS 502. So that will be publication IRS 502. So that wraps up the portion of the HSA versus FSA. Now let's talk about your math questions that you may see on the life and health exam, and that would be containing deductibles and co-insurance. All right, so co-insurance and deductible math. One thing that you will notice, and I have definitely noticed in the past, there's a lot of fluff, what we call fluff, in these questions. So they give you a lot of information that really does not matter when it comes down to determining the true answer of the question. There's three things you want to make sure that you notice in the question. Those are the only three things that will help you come up with the correct answer. That's going to be the amount of the bill, the amount of the insured's deductible, as well as the co-insurance split. So let's look at an example. We have Matt had a doctor's bill of $1,000 with a $500 deductible and an 80-20 co-insurance split. So those three important things: the bill, $1,000, the deductible, $500, and then the co-insurance split, 80-20. Keep in mind that the deductible has to be paid first before any co-insurance kicks in. So if the doctor's bill is less than the deductible, the co-insurance doesn't matter, because the insured has to pay their deductible first before any co-insurance will kick in and pay a portion of that bill. You need to know what each number in the co-insurance split means, what it represents. In this particular case, you've got 80-20 co-insurance split. That first number is going to be what the insurance is responsible for. So you've got 80. That means the insurance is going to pay 80% after the deductible is met. The insured or the client is going to pay 20% after the deductible is met. So let's look at that example. So you'll take the amount of the bill, if it's more than the deductible, and minus the deductible from that first, because the insured or client has to pay their deductible first. So the bill was $1,000. Matt's deductible was $500. So you're going to take 1,000 minus 500. That leaves $500. Matt, which is the insured, is responsible for 20% of that co-insurance after the deductible is met. So to determine what that amount will be, it's going to be 20% of 500. That's what was left. On a calculator, you will put in 500 times 0.2. That will give you $100. So if the question asks, what's the total that Matt would pay? You're going to have to first put in the deductible, which is $500, add his co-insurance responsibility, which was $100. Those two together equal $600. If the question asks, what's the total that the insurance company is going to pay? You're going to take the bill, once again, $1,000, minus Matt's deductible, which is $500. That leaves you with the $500. In the co-insurance split, they are responsible for 80%. So it's going to be 80% of 500, or on a calculator, 500 times 0.8, which equals $400. So of that $1,000 doctor's bill, Matt is responsible for $600, which is his deductible plus his co-insurance responsibility. The insurance company is responsible for $400. Those two put together, 600 plus 400 equals 1,000. And now Matt's doctor bill has been totally taken care of. Okay, so that is the portion for your co-insurance and math deductible. I hope this clarifies any content that you have read thus far on either FSA, HSA, or the co-insurance and deductible math questions. Once again, my name is Elisa Scott. I am with the Elite Insurance Group. We wishing you all the best as you take your life and health insurance exam, and we look forward to seeing you once again on our next video.